Hello friends, welcome to SuPrabha Academy's MPSC Combined Group B Group C course in English medium. Okay, continuing with the next, this is the second lecture for economy. Okay, in the last lecture we have understood the basic concepts of economy, the basic concepts, what are the different types of sectors, fine, then what is a capitalist economy, what is a socialist economy. We have understood all of these basic concepts, and with that foundation, this video is available on YouTube if you want to watch it again. Okay, so with that foundation we'll move to the first topic in economy, that is national income. Okay, the first topic in economy, that is national income. Now there are various concepts in national income. Okay, there are various concepts over here, so just see to it that you grasp the concepts first, and later on we'll just go through the data which is required for you to mug it up, okay, which is asked in the MPSC exam. So since we are going for MPSC, as the saying goes, do in Rome what the Romans do. So if you're going for MPSC, you will have to be focused on the pattern of questions MPSC asks. So what are the types of questions MPSC asks? Okay, factual questions and conceptual. Fine. So facts, you'll have to mug it up if you want to pass MPSC. We'll deal with the facts later on. First, we'll understand all the concepts related to national income. Fine. So let's start. If you want to understand what is national income, okay, we need to go through these four topics: GDP, GNP, NDP, NNP. These are the 4 points, terms which you need to understand. What is the meaning of these 4 terminologies? Okay, that you need to understand. Now let's simplify. So what is GDP? Gross domestic product. Okay, and what is GNP? Gross national product. So if you want to understand GDP and GNP, you need to be able to differentiate between domestic and national. You should be able to differentiate between domestic and national. Fine. So that is one. Next, what you have is GDP and NDP. So what is the difference? The difference is gross and net. GDP is gross domestic product, NDP is net domestic product. So here also you need to be able to differentiate between what is gross and what is net. Okay, what is gross and what is net? You need to be able to differentiate. Once you are able to differentiate between these two terms, the definition becomes very simple. Gross domestic product, net domestic product, or gross national product, net national product. The definitions, they become very simple. Fine. So let's understand them one by one. First, GDP. What exactly is GDP? Okay, what exactly is GDP? Now, the term itself signifies gross domestic product. Okay, what do you mean by domestic? Domestic means whatever is being produced within the domestic territory of the country. Okay, so clear-cut definition of GDP goes as the value, the sum value of all the goods and services produced within the domestic territory of the country in a financial year. That is the GDP. So if suppose this is the country, this is the territory of the country, whatever is produced over here, goods and services, the value of those goods and services produced in one financial year. Our financial year is from 1st April to 31st March. So in one financial year, whatever is produced, that becomes the GDP. Okay, to simplify the economy, let's say, just simplify the economy. In this economy, you produce only one mobile. Okay, in this economy you produce, it's a small economy, you produce only one mobile in a year, and the value of that mobile is 1 lakh rupees. So the GDP of this country is going to be 1 lakh rupees. If you produce one mobile, one watch, the value of the watch is 20,000 rupees, then the GDP of that country becomes 1 lakh plus 20,000, that is 1 lakh 20,000 rupees. So whatever you produce, the sum value of all the goods and services produced in a financial year is the GDP of the country. Remember, it is within the domestic territory. It is within the domestic territory. Then in this domestic territory, even if you have a MNC, multinational company, which have established their base over here. Okay, now many of the iPhones, okay, they are produced in Bangalore. Okay, Bangalore, there is a plant, Apple plant. So there you have the production of iPhones in India also. Okay, so even though this company is owned by Apple, the production is within the domestic territory of the country. Therefore, this produce is going to be counted as GDP. Okay, it is going to be counted as GDP. So whatever is produced within the domestic territory of the country, that is very important for you to understand. So that is a GDP. Okay, then what is GNP? The next term you have is gross national product. So this is gross domestic product. Okay, so then you need to know what is GNP. GNP is gross national product. What is GNP? So you need to understand the difference between gross domestic and national. GDP is gross domestic product. GNP is gross national product. So what is the difference between these two terms? Domestic and national, that we need to understand over here. So the difference, I will be picking up a concept from, let's say, commerce, wherein we have a concept of factors of production. Okay, just understand this small part, then we'll come back to GDP and GNP. In commerce, you have factors of production. So many of my commerce friends, they might have studied these factors of production. What are the factors of production? There are 4 factors of production: land, labor, capital, and entrepreneur. There are 4 factors of production: land, labor, capital, and entrepreneur. And each of these factors, when it's put to production, it will receive some remuneration. Kuch to paisa milega. Okay, it will receive some remuneration. So that remuneration they receive, land will receive rent. Okay, I'm conducting a lecture in this classroom. This place has been rented. So to produce this service, of teaching, okay, someone has given the land to us. So we give rent to that person. So land gets rent, labor, we get salaries. Okay, so labor gets wages. Capital, if someone has input the capital, but obvious, if you have taken a loan from a bank, the bank is going to get the interest. So capital is going to accrue the interest. And the owner, the entrepreneur, is going to take home the profit. The owner, the entrepreneur, is going to take home the profit. So land is going to get rent, labor is going to get wages, capital is going to get the interest, and those who are the owners, they are going to take home the profit. So these 4 are known as factor payments. So for the factors of production, you get the factor payments. So these are known as factor payments. Now, I hope this concept is clear. What are the factors of production and what are the factor payments? Okay, to put it over here. Okay, so these are the factors of production. These are the factors of production for which you will be getting factor payments. These are the factor payments. So whatever you want to produce, these are the 4 factors of production: land, labor, capital, and entrepreneur. Okay, so whatever you produce, whatever input goes, it is classified into these 4. Okay, and therefore the factor payments are: land gets rent, capital, it attracts the interest, labor gets the wages, they get paid in salaries, and the owner, the entrepreneur, takes home the profit. Fine. So now, how is it related to GDP and GNP? Okay, what happens is that in this period of globalization where everything is sold everywhere, everybody goes anywhere and works anywhere and all those things, okay, India as such, we employ our factors of production outside in the rest of the world. Okay, so suppose this is the domestic territory of the country, this is India, and this is the rest of the world. India is going to employ its factors of production. India is going to employ its factors of production outside, for which the rest of the world will give factor payments to India. They will give factor payments to India. A simple example. Tatas have taken over an international car brand. Okay, you might be knowing this, Land Rover and Jaguar. Okay, fine. So Tata has purchased those international brands, Land Rover and Jaguar. So whatever profit Tatas get, they are the owners, they are the entrepreneurs. That means India has employed its entrepreneur in the rest of the world. So whatever profit these cars make in the international market, that profit is going to come to India. Okay, that profit is going to come to India. Tata has also purchased Tetley tea. Okay, a tea brand. It internationally does purchase. So in that country, whatever profit that Tetley tea makes, Tata is going to bring it to India. Okay, because we have employed our entrepreneur over there. So we employ our factors of production outside. Same way, our IT engineers. Okay, for 2 or 3 months they will go on site at the client's place in Dubai, London, UK, US, anywhere. They'll go there 3 months, they'll work, they'll come back to India. Fine. For the 3 months they were employed over there, they are going to bring home the wages. Okay, whatever the client is going to pay, the money, that money is going to come to India because we have employed our factor of production labor in that country. Understood? So India employs its factors of production in the outside world, for which the outside world will give you factor payments. So India receives factor payments. Similarly, the outside world, the rest of the world will also employ their factors of production in India. Okay, Mercedes-Benz plant in Chakan. At Chakan, we have a Mercedes-Benz plant which assembles the Mercedes-Benz cars. Okay, so the cars are manufactured in country, theek hai, barabar hai. But who will take home the profit of these companies? Someone sitting in Germany. The owners in Germany, they are going to take home the profit because they have employed the entrepreneurship in India and therefore they are going to take home the profit. Okay, if there is some problem in that Mercedes-Benz plant, a technician from Germany will come to India. So the rest of the world is going to employ their labor to India, for which that company is going to pay them. This company is going to pay that technician. Okay, so when they employ their labor over here, they will be getting wages. So similarly, if you look at it, the rest of the world will also employ factors of production in India, for which they will also get factor payments. Simple सी चीज है. We employ the factors of production outside, we get factor payments from the rest of the world. Okay, rest of the world also employs their factors of production in India, for which they will also get factor payments. Okay, so now coming back to this, if this is understood, let's come back to this. What is the difference between GDP and GNP? Okay, I hope you have understood this. Now, if this is understood, what is the difference between GDP and GNP? GNP, okay, this is important. You get a question on this equation. GNP is equal to GDP plus factor payments received from the rest of the world. Okay, factor payments received minus factor payments paid to the rest of the world. Okay, so to this GDP, whatever has been produced domestically, if you add whatever we receive from abroad, the factor payments we receive from abroad, and subtract whatever our country has to pay, make factor payments to the rest of the world, you get gross national product. This is the difference between GNP and GDP. I hope this is clear. Okay, I hope you have understood this part. Check again whether you have understood the concept. We have gone through the GDP, we have understood what is factors of production and factor payments, and now we have understood the difference between GNP and GDP. Okay, or these two, factor payments received minus factor payments paid. So if India is getting 100 rupees from abroad and we are paying 20 rupees abroad, what is the net factor income from abroad? Okay, that is going to be 100 minus 20, that is 80 rupees. Okay, so that means if we get 100 rupees from the rest of the world in a financial year and we have to pay 20 rupees to the rest of the world in that financial year, that means the net factor income from abroad becomes 80 rupees. So you can also write this equation as GNP. Just erase this part so that it becomes easy. Okay, so GNP is equal to GDP plus net factor income from abroad. Net factor income from abroad, or in short it is written as GNP is equal to GDP plus N net factor income from abroad, NFIA. Okay, so remember these equations, you get these equations in the combined exam. Okay, so GNP is equal to GDP plus net factor income from abroad. Yes, so this is the difference between domestic and national. So GNP actually gives what the nation produces, what is the income of the nation as such. Domestically what is being produced, that is GDP. Okay, so the income of the nation from all sources is given by GNP, and GDP as such, gross domestic product. Okay, gross domestic product is whatever is being produced domestically. Fine. So have you understood the two terms GDP and GNP? Okay, fine. Note down the equations. These equations are very important. GNP is equal to GDP plus factor payments received minus factor payments paid, and GNP is also, now this, if you club this up, this becomes net factor income from abroad. Net factor income from abroad, or in short you can write NFI. Okay, fine. Now that you have understood this, okay, now that you have understood this, let's move to the other two aspects. So what have you understood? You have understood GDP, GNP. Now next move to NDP and NNP. So whatever capital you produce, that capital is going to have some depreciation. Okay, so if you produce a machine, okay, in a financial year you produce a machine and that machine is used for some other work, okay, that machine will undergo depreciation. Uska cost, uska कीमत कम होते जाएगी. That machine, the value of that machine would reduce. Okay, so what happens in an economy is that there is depreciation, the value reduces. Even though you have the capital assets, the value reduces. Okay, so net domestic product is equal to GDP minus depreciation. Now how much is the depreciation, क्या है ये सब हमें देखना नहीं है. Okay, but you need to just understand the concept. NDP, net domestic product, is GDP minus depreciation, and NNP, net national product, is GNP minus depreciation. GNP minus depreciation. Fine. So GNP is equal to GDP plus net factor income from abroad. And what is GDP? Whatever is produced within the domestic territory of the country in a financial year, the value of all those goods and services is the GDP. Okay, so the sum value of all goods and services produced within the domestic territory of a country in a financial year is GDP. Okay, have you understood these four concepts? GDP, GNP, NDP, NNP. For simplification, you can also write it as, see, GDP, GNP, NDP, NNP. So in GDP, if you add net factor income from abroad, you get GNP. Okay, understand this. In GNP, if you minus net factor income from abroad, you are going to get GDP. In GDP, if you subtract depreciation, you are going to get NDP. In NDP, if you add depreciation, you are going to get GDP. In GNP, if you subtract depreciation, you are going to get NNP, gross national product, and net national product. In NNP, if you add depreciation, you are going to get GNP. Okay, same equation over here. NDP plus net factor income from abroad is going to give you NNP, and NNP minus net factor income from abroad is going to give you NDP. Understand this square? You will get the whole concept. Fine, understand it, and you definitely get questions on this understanding. So this is a concept. Grasp the concept. You will never fail in the exam. जो चीज मगअप करनी है उसे मगअप कर लो, जो चीज कॉन्सेप्चुअल है उसको ग्रास्प कर लो. Fine, okay. So we have understood this four concept: GDP, GNP, NDP, NNP. Okay. Now moving ahead. Okay. Moving ahead, there are various other allied parts to this. Okay, how are you going to measure the national income? Let's say you have to measure GDP. How are you going to measure GDP? Okay, what are the methods to measure GDP? We'll understand that. Okay, fine. What is GDP? Whatever has been produced within the domestic territory of the country, that is GDP. Okay, now what is GDP? What is this? What are the methods used to measure GDP? Again, let us simplify the economy. Let us simplify to understand the concepts. Just simplify the economy. Okay. Suppose this is an industry. There is only one industry in this country. ये छोटा सा classroom जो अपना है ना वही अपनी country है. And in this country there is only one industry. This industry has manufactured this mobile phone in one financial year. Okay, this industry has manufactured this mobile phone in one financial year. So what is the GDP of the country? The GDP of the country is nothing but the value of the output. Okay, so it has manufactured just one mobile. So then you go and ask, what is the value of this mobile? It is 1 lakh rupees. How much is the value of the mobile? 1 lakh rupees. So then in that case, what is the GDP of the country? The GDP of the country is 1 lakh rupees because this is what has been produced domestically in a financial year. How have you arrived at this GDP? By measuring the value of the output. So this is known as output method. This is the first method to measure the GDP of a country, that is output method. Okay, so the first method to measure the GDP of the country is output method. Okay, output method. So output method, income method, and saving and expenditure. We'll look at each one of these. So this is the first method. Now, understand one thing. These are the houses. Okay, so for simplification, all the houses are clubbed as one, just as all industries are clubbed as one industry in the economy. Okay, now, how did you come to this value of 1 lakh rupees? Please understand this. ये 1 लाख रुपए मोबाइल के वैल्यू पे आप कैसे पहुंच गए? ये मोबाइल का 1 लाख रुपए वैल्यू है, कैसे पहुंच गए आप 1 लाख रुपए पे? Someone has supplied this cover. जिसने भी ये कवर सप्लाई किया उसको 200 रुपए मिल गए, चलो 500 रुपए जो भी हैं. ओके, someone has supplied this screen. जिन्होंने भी ये स्क्रीन सप्लाई की, ओके, उनको मिल गए 2000 रुपए, 5000 रुपए. Someone has provided the chips used in the mobile. उनको 20-25 हज़ार रुपए मिल गए. बाकी और किसी ने ये स्पीकर्स, ये माइक्रोफोन, ये सब इंस्टॉल कर दिया. देयर इज लेबर ओवर देयर जो ये सब पैक करेंगे. लेबरर्स का वेजेस गया, ओके, उनको कुछ 10-15 हज़ार वेजेस गया. और जो बचा हुआ अमाउंट है, द ओनर विल टेक होम द प्रॉफिट. जो ओनर है वो भी बोलेगा ना कि मुझे भी 20,000 रुपए प्रॉफिट चाहिए. ओके, सो ओनर का 20,000, बाकी लेबरर्स का 10-15 हज़ार, जिन्होंने चिप सप्लाई किया, जो काम किया चिप पे, उनको कुछ पैसा गया. ये सबका पैसा मिला के जो वैल्यू आता है, द value of all these people put together, the income of all these people put together is 1 lakh rupees. Therefore, because these are the factors of production which has gone into this mobile. So the value of these factors of production, is 1 lakh rupees. It means these people have taken home, if you measure the income of these people, all the people in the economy, if you measure the income, okay, of all the people in the economy, the income of all the people in the economy is also 1 lakh rupees. Okay, the income of all the people in the economy is also 1 lakh rupees. Yes, because the mobile which they have produced is 1 lakh. It means that people, these are the factors of production. The factors of production, the factors of production value is 1 lakh rupees. It means that those who have supplied the factors of production, they will be also getting an income of 1 lakh rupees. So this is the second method to measure the national income of the country or the GDP of the country, that is income method. Okay, GDP is not national income, but GDP of the country, we are measuring the GDP of the country. So this is the second method of measuring the GDP of the country, that is income method. Now remember one thing, you are going to use either output method or income method. दोनों नहीं यूज करना है. अगर दोनों आप यूज करोगे तो the GDP of the country will be 2 lakh rupees, which is a misrepresentation. Okay, that means you have produced just one mobile. So what is the value of this mobile? 1 lakh rupees. So output method GDP 1 lakh rupees. Then you again go home and ask each one of you, how much money have you got earned this year? They'll say 1 lakh rupees, means together, put together 1 lakh rupees. So again you add 1 lakh and 1 lakh, 2 lakh, that is a misrepresentation. You are either going to use this method or this method. And the third method which you use, Okay, the third method which you use, fine, understand this. People in the house, they are going to get an income of 1 lakh rupees. What are they going to do with the 1 lakh rupees? 1 lakh रुपए का वो करेंगे क्या? What are they going to do with the 1 lakh rupees? They are either going to spend or they are going to save. They are either going to spend or they are going to save. So if you look at the expenditure and saving, if you look at the expenditure and saving in the economy, if you add this, again it is going to be 1 lakh rupees. So this comes to the third method of measuring the GDP of the country, that is 1 lakh rupees again. So you have got three methods to measure the GDP of the country: output method, income method, and saving plus expenditure method. Is this understood? Yes. So there are three methods. Okay, you need to know this. There are three methods to measure the GDP of the country: output, income, and saving plus expenditure. Now, in India, now this is again the next question which you get in the exam. In India, there are just two methods, okay, we use to measure the GDP or the national income of the country. Okay, fine, that is income method and the output method. India uses only these two. India uses the output method and income method. Only two methods we use in the country. We don't use expenditure and saving method. It's very logical. Many of the expenditure which we do, okay, many of the expenditure which you do is not accounted. Okay, for example, I'm in a village somewhere and I go to the ST stand, have a cup of tea at that place. I give him 10 rupees from the pocket. Do I account this expenditure? नहीं, ये तो 10 रुपए का चाय ले लिया खत्म. Okay, 10 रुपए उसको कैश दे दिया, खत्म हो गया. Okay, so not all expenditures in this country are accounted for. Therefore, that's the reason we don't go for expenditure and saving. If all the expenditure is digital, GPay, Paytm, UPI, if all the expenditure becomes digital, then definitely all the expenditure and also all the saving can be monitored, and then we can use expenditure and saving method. But at this moment in our country, we don't use expenditure and saving method. What we use is output and income method. This is very important for you to understand. The two methods which we use in the country are output and income methods. Fine. So output and income method. We don't use the expenditure and saving method. So which method do we not use? Expenditure and saving method. Which method do we use? Output and income method. Mind you, we don't use both the methods. Okay, we don't use both the methods for a single sector. Okay, you are going to use this method separately for separate sectors, these two, output and income. Okay, so where do you use output methods? Output method you use where the product is tangible. Okay, where the product is tangible, जो product आप हाथ में ले सकते हो, देख सकते हो. Okay, fine. ऐसे products के लिए you are going to use output method. So agriculture, manufacturing, यहाँ पे here you are going to use output method. But what about those sectors where the output is not tangible? It's mostly the services. Okay, what I am delivering here as a lecture to you people. Okay, if I am delivering this lecture to you people, okay, you go home and if your parents ask, what have you got from the class? Can you show it to them? अरे हमने ये concept किधर है? It is there in your brain, but it is a service I have produced. You cannot show it to everybody. Okay, it is a service I have produced. You go home, you have come here with your bag, you'll go home with your bag, you're not going to put additional over there. So in this case where the output is not tangible, in this service sector, how are you going to understand the contribution of this service sector to GDP? In that case, you are going to take the income of all the people who are working over here in this class. So SuPrabha Academy में कितने लोग काम कर रहे हैं, उनका सबका income plus owner का profit, ये सबका income अगर आप add करोगे, that is going to be the contribution of SuPrabha to the GDP. That is going to be the contribution of SuPrabha to the GDP. Okay, you add the income of all the people who are engaged in SuPrabha Academy. Fine. So in that case, in those sectors, mostly in service sectors, we use the income method. You use the output method only in those sectors where you have tangible goods which are produced. Okay, fine. So output method in livestock, agriculture, जहाँ पे आपको दिखता है क्या produce है, वहाँ पे आप output method. Okay, and income method from small enterprises, commerce, transportation, communication. I take use of a truck to deliver the goods from this place to that place. Okay, so that's a service I have taken. So what is the contribution of that service sector to the GDP? You take the income of all those persons who are engaged in the transportation business. Okay, fine. Mind you, you are not going to use two methods in the same sector. You are going to use, we use two methods in India, but these are for different sectors. Okay, these are for different sectors. Okay, fine. Saving and expenditure we don't use in the country. Okay, so this is about how you measure the GDP, or for that matter the national income of the country. The three methods: output, income and saving plus expenditure. So we have understood the four concepts. Okay, then we have understood how to measure it. GDP कैसे measure करते हैं. अभी एक concept है यहाँ पे जो आपको, you need to know that. You need to know this concept, okay? Because based on that concept you get questions in the exam, okay? You need to know what is factor cost or factor price भी बोलते हैं इसको, factor price, basic cost or basic price, and market cost or market price. Okay, you need to know what are these. Fine, okay. For that, let's take an example again. This industry has manufactured one mobile. The same example will continue. This industry has manufactured one mobile worth 1 lakh rupees. So how did you arrive at this value of 1 lakh rupees? As I told you, these are nothing but this is the addition of all the factors of production, the factor payments made. Okay, so whatever factors of production has gone into the mobile, you add the value of those factor payments made to these factors of production, that addition comes to 1 lakh rupees. Therefore, at the factory level, whatever price you have at the factory level, this is known as factor price. क्या बोलते हैं इसको? Factor price. This is known as factor price because it adds up all the factors which go into production, including the profit of the owner. Okay, transportation वगैरह वगैरह सब इसमें आ गया. Factors of production सब इसी में आ गए, उनका सबका value add किया. Okay, so that becomes factor price. Okay, you add up all the factors of production, the value becomes factor price. Now this mobile is going to go to the market. We are going to send it to the market for selling it. Okay, so this mobile goes to the market. When this mobile goes to the market, there is a change in its price. Okay, can anybody guess what's the change in the price? When this mobile goes to the market, what is the change in the price? Okay, transportation, everything I included in this factors of production. So retailer का profit, wholesaler का profit, सब कुछ इस factors of production में आ गया. Okay, the change in the price is with respect to the taxes. Yes, the taxes which are levied by the government. So what happens is that over here you add the GST. GST is an indirect tax. So indirect taxes are added. When this product goes to the market, you add the indirect tax. Okay, so one second, I did different. You add the indirect tax. Okay, any other change which you can think of when this product goes in the market, which will change the price of that product? It is nothing but subsidy. It is subsidy. So if at all the government is providing subsidy, that price will be reduced and you will get it in market in a cheap manner. The best example is the LPG gas cylinder which we get at home. Okay, the market price is, the factor price is something, but government provides a subsidy which we get directly in a bank account. So therefore in the market we get the gas cylinder at a less price. Similarly, poor people when they go to government hospitals, they have to pay hardly 5 rupees or 10 rupees for that case paper. Bus, medicine, doctor service, everything is free for them. That means हॉस्पिटल का जो सर्विस है, द सर्विस प्रोड्यूस बाय द हॉस्पिटल इज नॉट cheap or it is not free. Okay, I'm sorry, the price is not zero. Whatever service the hospital has produced, it has to be there is going to be a price, but all this price is borne by the government. They provide it as a subsidy, therefore poor people are going to get it at 0 rupees. Okay, in a sense the doctor needs to be paid salary. कोई भी गवर्नमेंट हॉस्पिटल में काम कर रहा है, बट नो वन इज गोइंग टू वर्क फॉर फ्री. Okay, so the doctor has to be paid salary. The nurses over there, they have to be paid salary. The medicines you have to pay for the medicines also. But who is paying? The government is paying. So the government is giving a whole subsidy. So the factor price, the production of that service, doctor medical service, it is, let's say, 1 lakh rupees per month. Okay, the price of nurses and medicines and everything is 1 lakh rupees, but government is directly giving a subsidy of 1 lakh rupees. Therefore, the poor people get this service, medical service, free of cost. So factor price is something, market price is something. Market price in this case, medical service at government hospital is reduced because the government is providing subsidy. Okay, so for any product, the market price, please remember this equation, market price is equal to factor price or factor cost plus indirect taxes minus subsidy. This is the equation you need to mug up. Market price is equal to factor price plus indirect taxes minus subsidy. Okay, this is the equation you need to mug up. Mug up करने की जरूरत नहीं, understand कर लो. From the factory, if anything is going to the market, there is going to be addition of government taxes, or there is going to be subtraction of subsidies if the government at all is providing. Mind you, government does not provide subsidy for each and every good or service. Okay, so but wherever it is applicable, it has to be subtracted. Now, once MPSC had, what happens is that students, they just mug up plus indirect tax minus subsidy, plus indirect tax minus subsidy. But once MPSC had just reversed the equation, उन्होंने क्वेश्चन क्या पूछा था? Factor price is equal to market price in this case, okay, in this case it's going to be market price minus indirect taxes plus subsidy. Is going to be market price minus indirect taxes plus subsidy. यहाँ के आइटम यहाँ पे जाएगा. Okay, if the term over here it goes on this side of the equation, the value changes. Okay, the sign changes. Fine. So they had asked this question. Whatever it is, you need to understand or mug up this equation. Okay, so I can come to the value of this pen marker in two ways. One is factor price, another is market price. Have you understood this? Okay, factor price and market price. Okay, now, but here I had put in one more price or cost in the middle, basic price or basic cost. Here I have put in one more price or cost in the middle. What is basic price, or what is the relation between basic price and factor price? Understand this. Okay, see, basic price, sometimes there is an industry, okay, and the government does not want the produce of that industry to go cheaply into the market. Okay, it might be a polluting industry, it is causing some environmental pollution. So if I set up such industry, let's say tanning industry, okay, tanning industry, you manufacture the hide, okay, leather hides and all those things, you tan it. उसमें क्या होता है, the tanning industry, there's lots of water flows, okay, out in the open. अभी ऐसा नहीं है, there is a effluent treatment plant, but it pollutes to a certain extent. It pollutes. What does the government say now? If you are establishing a tanning industry, or if you are establishing a cigarette industry, cigarette is harmful for health. So if you are going for cigarette industry, you will have to pay 1 lakh rupees per annum. Okay, because you are causing harm to the people, or because you are polluting the environment, therefore you will have to pay 1 lakh rupees per annum. Now this 1 lakh rupees is not on how much cigarettes or those leather products have been produced. it is directly 1 lakh rupees. So it is not based on the quantity of production, it is directly on the production. कि बाबा आप प्रोड्यूस कर रहे हो ना, आपको 1 लाख रुपए देना है, फिर आप एक सिगरेट प्रोड्यूस करो या तो 100 सिगरेट प्रोड्यूस करो, irrelevant. So this basic price, so what happens is that, how do you arrive at this basic price? Okay, I'll just erase this part. Okay, how do you arrive at this basic price? So factor price plus production tax, mind you this is production tax, इसको क्या बोलते हैं? Production tax. Because you are producing you have to pay a tax. It is not on the product, कितने product आप बना रहे हो उस पे नहीं है, कितने cigarettes आप बना रहे हो उस पे नहीं, it is not on the number of cigarettes you manufacture, it is just because you are manufacturing, producing cigarettes, you have to pay production tax. So factor price plus production tax becomes basic price or basic cost. Factor price plus production tax becomes basic cost. Fine. So this then becomes the basic price. So wherever there is production tax, mind you, on it is not there on each and every item or article which is produced in the economy. सब पे नहीं है. Okay. But wherever you have the production tax being levied by the government, okay, there you get the basic price. And in this case, factor price plus production tax will give you the basic price, and basic price plus indirect taxes. Okay, basic price plus indirect taxes minus subsidy is going to give you market price. Is going to give you market price. So this then becomes the equation. This then becomes the equation. Okay, so if you have a polluting industry, government will say you are going for this production, you have to pay 5 lakh rupees per annum. चाहे आप एक quantity बनाओ या 10 quantity बनाओ. Okay, so therefore you add the production tax also to, this is production tax. Mind you, yes, here you just need to understand one thing, इसको production tax बोलते हैं because you are levying it on production, not on the number of what is produced, but just on production. You are producing, you pay production tax. Indirect tax is said to be commodity or product tax, इसको product tax बोलते हैं. This is known as product tax, indirect tax. GST जो levy करते हैं उसको product tax बोलते हैं, product or commodity tax. Okay, so factor price plus production tax is basic price, and basic price plus product tax, that is indirect tax, that is GST, is market price. Here also you can have subsidy. Here also you can have subsidy. Okay, what are you manufacturing? Okay, notebooks. Very good. Notebooks are very important for education. So just because you are manufacturing notebooks, every year government is going to give you a subsidy of 1 lakh rupees. In that case, the basic price is going to be factor price minus subsidy, production tax if at all, minus subsidy is equal to basic price. Fine. This is going to be production subsidy. It is not going to be the product subsidy. It is going to be the production subsidy. Okay. Just see to it that you have understood the three prices in the economy. Okay. The three prices in the economy: factor price, basic price, and market price. Again, let us revise. We have understood the four terms: GDP, GNP, NDP, NNP. Fine. उनका relation भी हमने समझ लिया है. Okay. Next, what you have understood? Next, we have understood how are you going to measure, what is the measure, how are you going to measure these values? Okay, what are the methods of measurement? Output method, income method, and saving plus expenditure method. We have understood this. Okay, so where do you use output method in the country? Where do you use income method in the country? That also we have understood. We don't use saving and expenditure method. Okay, fine. So this we have understood. Then whenever you are going to go for output method, which is the price you are going to consider? फैक्टर प्राइस या मार्केट प्राइस, क्या कंसिडर करो? इस साल हमारे देश ने ये मोबाइल बनाया. ओके, मोबाइल की कॉस्ट 1 लाख रुपीस. दिस इज अ फैक्टर प्राइस. व्हेन यू गेट इन द मार्केट, जीएसटी इज एडेड टू इट, 18% जीएसटी. सो इन द मार्केट यू गेट 1 lakh this mobile for 1,18,000 rupees. Okay, so you either get it for 1 lakh rupees or you either get it for 1,18,000 rupees. That means this mobile will carry two prices, 1 lakh rupees and 1,18,000 rupees. Which price are you going to consider while calculating the value of this mobile? Okay, so we have understood the different prices for that same commodity you have in the economy. So you have factor price, your basic price, and you also have the market cost or market price. Okay, so relation between factor price and basic price, we have understood. Factor cost plus production tax minus production subsidy is equal to basic price. Basic price and market price is one and the same. Product tax, that is indirect tax, that's what I have told you, and minus product subsidy is market price. Yes, so this is the relation. Okay, if you don't have basic price, there is no production tax. At many places, for many items you don't have production tax. So in that case, directly you have the relation between factor price and market price. Factor price plus indirect tax minus indirect the product subsidies is equal to market price. This equation we had seen. Okay, so what are the some examples of production taxes? Health tax, if levied on a cigarette manufacturing company. Cigarette is injurious to health. So if health tax is levied, not on how much is the amount produced, but just because you are producing cigarettes, you will have to pay health tax. So health tax in this case becomes a production tax. It becomes a production tax. Understood? Check whether you have understood. And product tax is nothing but GST, excise duty, service tax. These are all product tax. It depends on how much number you are selling. So if GST is 18%, that is 18% is for each mobile. So therefore it is a product tax. It is a product tax. Fine? Okay, so you have understood this concept. Now you come to the real picture. What is national income? I'll give you why I put a question mark over here. See, there are four concepts: GDP, GNP, NDP, NNP. There are four values. Okay, these are four different values. GDP is different, GNP is different, NDP is different. NDP you get after subtracting depreciation from GDP. NNP you get after subtracting depreciation from GNP. Okay, so these are four different values. Now again, for these values, I can either get the GDP value at factor price or I can get the GDP value at market price. Suppose this year this country produces only one mobile. The factor price of this mobile is 1 lakh rupees. So I have GDP at factor price 1 lakh rupees. But if I consider the market price, which is 1,18,000 rupees because of the indirect tax, okay, GST. So GDP at market price is 1,18,000 rupees. GDP at factor price is 1 lakh rupees. GDP at market price is 1,18,000 rupees. वो basic price को हम बाजू में रखेंगे. We'll just keep the basic price aside. Okay, fine, but just understand the concept. So either you have GDP at factor price or either you have GDP at market price. Okay, similarly you can have GNP at factor price or GNP at market price. Similarly, you have NDP at factor price and NDP at market price. You can also have NNP at factor price and you can also have NNP at market price. That means I have got 8 values. Out of the 8 values, one value is considered as national income of the country. Out of these 8 values, one value is considered as national income of this country. Can you just make a guess what can that be? Okay, if I am getting random answers, okay, on Google Meet also I am getting, so it means everybody is giving a different answer. So let me come to the correct answer. See, between domestic and national, let's understand rather than mugging it up. Okay, between domestic and national, which is a true picture of the income earned by the country? It's national, right? Because we get income from abroad also, and we also subtract the payment we give abroad. So national give you the real picture of the income of the country. So it has to be national product, not GDP. So this value, these four values, they are gone. बिकॉज डोमेस्टिक नहीं है, नेशनल लेने वाली. अब नेशनल में भी आप क्या लोगे, ग्रॉस लोगे या नेट लोगे? यू आर गोइंग टू गो फॉर ग्रॉस वैल्यू और द नेट वैल्यू. विच वन इज द रियल डिपिक्शन? It's a net, because net value you get after reducing the depreciation, you get the actual value. So you're not going to go for gross national product, you're going to go for net national product. Again, net national product, you're going to go at factor price or market price. Which price? NNP at factor price or NNP at market price? It is the factor price. Why? Because here you measure the factors of production which have gone into the production and the value of this. So if there is an increase in the factor production, okay, fine, that means there will be an increase in the national income. Okay, you cannot go for market price, because market price is nothing but the addition of indirect tax. Let's say this year our country has produced only one mobile. Value of the mobile 1 lakh rupees, GST 18%. So factor price is 1 lakh rupees, market price is 1 lakh 18,000 rupees. Okay, next year the country again produces one mobile. The factor price of this mobile is 1 lakh rupees, but next year the government levies an income tax of 28% on mobile. So the market price is going to be 1,28,000. So if you take the national income as market price, what happens is that the market price is increasing without actually increasing the production, because you have just increased the tax. So market price cannot be the true depiction of national income. If you really want to know the national income, it has to be NNP at factor price. So just mug it up, or it's better that you understand national income is nothing but NNP, net national product, at factor price or factor cost. Okay, so please note it down. National income is nothing but NNP at factor price. Fine. So moving ahead, there is a concept of circular flow of income. Okay, now there are certain allied topics attached to the national income. Okay, there is a topic known as circular flow of income, which you need to understand. Okay, which you need to understand. See, these are all the households in the economy clubbed as one. Okay, and this is the factory. This is a factory in the economy. Fine. From the households to the factory, we have the factors of production going over there. So factors of production go from the house to the factory. But from the factory to the house, you have the factor payments going back. So how does the money flow? Money flow, people from the house, they give their factors of production to the industries, and from the industries you get factor payments which goes to the homes. I come here, I give my labor, for which I will be getting a salary, so I take home the salary. I take home the salary, that is factor payments. Fine. Now from the house to the factory, okay, now there is a circular flow. From the house to the factory, okay, there is a spending. Okay, I take home the salary, but I don't keep the salary at home. I buy milk, okay, I buy some wheat, I buy some rice, I use the services of the cab, okay, I buy the gas cylinder. Okay, so from the house you have the consumption expenditure. From the house you have the consumption expenditure. Okay, we consume something, so we spend money. So this money again comes back to the industry. This money again comes back to the industry, and from the industry you have the flow of goods and services back to the homes. So you have goods and services going to the homes. So goods and services are produced over here, but they go to the homes itself, because whatever the industry produces, it has to reach the homes. Otherwise, there is going to be no business at all. It has to be sold. People are going to take it home. Fine. So this is known as circular flow of income, because the money comes from the industries to the households as factor payments, and again it goes back to the industries as consumption expenditure. Okay, so this is known as circular flow of income. This is happening every now and then. This will never stop. This will happen every now and then. This cannot stop. Just imagine everybody sitting at home. How will the economy work? Okay, so someone will have to go to the industry to produce something, and that something has to be sold. This is how the economy goes on continuously. So this goes on year, week, day, and centuries together. This flow is continuously going on. Yes, at times of prosperity, this flow will increase. The volume will increase. During times of recession, mandi, the volume will decrease. But there will be a circular flow of income. This circular flow will never stop. It will either expand or it will reduce, but it will be there continuous. Okay, so this is the concept of circular flow of income. Okay, we see that money flows from business firms to households as factor payments, and then it flows from households to business firms as consumption expenditure. As consumption expenditure. Thus, there is in fact a circular flow of money or income. The circular flow of money will continue indefinitely, week by week, year by year, and this is how the economy functions. Whatever salary I'm going to take back from this industry, I'm going to spend it again. I'm going to go for consumption expenditure. I'm going to consume things. Okay. In the first lecture, we have understood the basic concept of production, consumption, okay, and distribution. This is all the whole economy is all about. Okay. If you have missed the first lecture, kindly go through it. It's available on YouTube. Okay. Now, it may, however, be pointed out that this flow of money income will not always remain the same. In years of depression, recession, the volume of this money flow will reduce. In years of prosperity, the volume of this money flow will increase. That is, in years of prosperity, national income will increase. In years of recession, depression, the national income is going to reduce. Okay, understood this part? Okay, moving ahead. Assumption is that all money we earn is spent on consumption. Whatever salary I have taken home, I spend it on consumption. I spend it. Only then that money will again go to the industry, and the industry will feel the demand that, okay, fine, there is a demand for the produce, and they will start producing more items. Okay, so the assumption is that all money is spent on consumption. But what if we have a financial intermediary? What is a financial intermediary? You understand from this diagram. So this is the same diagram. You have the households, okay, and you have the business firms. Since you have only two sectors, it is known as simple two-sector economy. This is a simple two-sector economy which does not have any relation with the rest of the world. There is no government. There is no relation with the rest of the world. Since there is no relation with the rest of the world anywhere, it is known as a closed economy. This is a closed economy. Okay, no import-export, nothing. Okay, so this is a simple two-sector economy. Now, what happens is that, let's say the factor payments, okay, the factor payments the household receive is 100 rupees. Okay, so whatever is the business firms have produced goods worth rupees 100, okay, that's the reason the factor payments made to the houses is 100 rupees. Now, if the houses get 100 rupees, do you think they are going to spend everything? No. What they do is that they purchase something, they buy goods worth 80 rupees. So 80 rupees becomes the consumption expenditure, and they save something like 20 rupees. So 20 rupees is the saving. हम लोग पूरा पैसा खर्च नहीं करते, हम लोग पैसा सेव करते हैं. We save 20 rupees. Let's say 20 rupees in an example. We save it with financial markets. Financial market में बैंक हो सकता है, LIC हो सकता है, mutual funds हो सकते हैं, anything. We save the money over there. Okay. So now if we get 100 rupees as income and we consume only worth 80 rupees, what will the business firms feel? Array, demand is only 80 rupees. Business firms will feel that the demand is only 80 rupees. There is just 80 rupees of demand, 80 rupees worth of goods and services are demanded in the economy. So next year, will the business firms produce goods and services worth 100? No, they will produce only goods and services worth rupees 80. अगर ऐसा हो गया तो इकोनॉमी क्या होगी? श्रिंक हो जाएगी. क्योंकि 80 रुपीज का प्रोड्यूस करने के लिए व्हाट विल दे से कि अरे 2-4 लेबर को घर भेज दो, 1-2 क्लासरूम्स नहीं लेने बिकॉज हमको थोड़ा कम का प्रोड्यूस करना है. Getting it? That means they will not use all the factors of production, and the factor payments to the household is also going to shrink. Understand this concept. Okay, the factor payments to the household is also going to shrink. Okay, so in that case what happens? In that case what happens? The economy is going to shrink. Okay, there is going to be recession, मंदी आ जाएगी. लेकिन क्या होता है? What happens is that this 20 rupees which is saved, it again comes back into the circular flow of income through borrowing for investments. इसको I बोलते, saving को S बोलते, and consumption expenditure को C बोलते. Okay, fine. So whatever money is with the bank, now Reliance, they wanted to establish Jio. Do you think Reliance had all the money in their pocket and then they spent the money to establish Jio? नहीं. क्या किया उन्होंने? They took a loan from SBI and other banks. They took a loan. Okay, literally they might have taken a loan of 35,000 crores. So what happens is that whatever money we save, it was taken by, let's say, ye 20 rupees, it is taken by Reliance. What will Reliance do with the money? It will use the money for optic fiber cables. So it will give it to that company which is producing optic fiber cables. It will use the money for those people who are establishing those towers for Reliance. Okay, so what happens is that this 20 rupees by way of investment again comes back into the business firms or this circular flow of income, and this is how the constancy of circular flow of income is maintained. Otherwise, this 20 rupees would have been a leakage and the economy would have been shrinking continuously. Next year, घर वालों को 80 रुपए मिलेंगे, they will get 80 rupees of the income. Again, they will save 20 rupees, they will spend only 60 rupees. So next year, the households are going to get 60 rupees, they will save 10 rupees. Next year, they are going to get 50 rupees and they will spend whole 50 rupees because उसमें saving ही कुछ होगी नहीं. But the economy will continuously go on shrinking. This doesn't happen. Why? Because whatever money you save, it finds its way to the, again, circular flow of income by way of investment, borrowing for investment. Getting it? Even I take a home loan. From the banks, I take a home loan. I buy a flat. So that is again going into the business firms. So again, that money comes into the circular flow of income. Okay, this is how the constancy of circular flow of income. So whatever saving you have, that becomes equal to the investment expenditure, I. Then this circular flow of income is maintained. Okay, it is maintained. Have you understood this concept? This is a simple two-sector economy. Check whether you have understood this concept. Okay, the notes and PPTs of this, you will be getting it on the Google Classroom. Kindly connect with the number. Okay, kindly connect with the number which has been provided. Okay, or you can fill up the Google form. Okay, if you want the notes and PPTs of this, kindly fill up the Google form. Okay, so that the concerned team will contact you. Okay. Let's move ahead. So when the households save, their expenditure on goods and services will decline to that extent, and as a result, money flow to the business firms will contract. So with reduced money, firms will hire fewer people because paisa demand is less, 80 rupees ki demand is, so they are going to hire fewer people. So this will lead to a fall in the total incomes of the household. So next year the household are going to earn only 80 rupees. Hamara example jo hai, whatever example we have taken. So the savings reduce the flow of money expenditure. Therefore, savings is sometimes called as leakage from the money expenditure flow. Savings ko, okay, it is sometimes known as leakage. But does this happen? How can this be avoided? Okay. Planned saving must be equal to the planned investment. That means S should be equal to I. In that case, the constancy of the circular flow of income is maintained. We have seen it in the diagram itself. This is just in words. Okay, so no need to go through it. This is nothing additional. So what will happen if the planned investment falls short of the planned savings? That means money saved is 20 rupees, but money invested is only 10 rupees. What will happen? In that case, the economy is going to shrink. There is going to be recession. Okay, there is going to be recession. The economy is going to shrink. Fine. But what if investment expenditure demand is 30 rupees and the money saved is only 20 rupees? समझ के ले लो ये. in that case the economy will prosper. There is going to be more investment expenditure, there is going to be more, the business firms are going to borrow more money, more and more money from banks, financial intermediaries or other sources, international sources, and they are going to pour in more money in the circular flow of income. Therefore national income will rise, national income will rise. Okay, so this is what happens if there is a mismatch between savings and investment. We are going to save, every household saves, but that saved money from the bank, it has to come back into the circular flow of income by investment expenditure, by way of investment expenditure. So this is the same thing. Now in a two-sector economy, what is the equation for national income? Now mind you, the abbreviations which I have given, C is for consumption expenditure, S is for saving, I is for investment expenditure, okay, and Y is for national income. Okay, so in a two-sector economy, what is the national income? Now this is a closed economy, bahar se kuch andar nahi aa raha hai, andar se kuch bahar nahi ja raha hai. So what will be the national income of the country? The national income will be same as what is domestically produced. So what will be produced in the economy? In this two-sector economy, how much will the business firms produce? Whatever the business firms produce, the value is going to be the national income of the country, because there is no external sector, no external world, no rest of the world over here. So how much will the business firms produce? One, they will produce as much as what consumption expenditure is. जितना domestically हम लोग consume कर रहे हैं, जो demand कर रहे हैं, that much will be produced. 80 rupees will be produced by this. Also, they will be, okay, the business firm will produce as much as there is investment expenditure. Jitna bhi investment. So Reliance has taken a loan for Jio, and Reliance has paid money for that optic fiber cables. So your optic fiber company will also produce optic fiber cables worth that much amount. Fine. So in that case, the business firms, the whole business firms are going to produce whatever is the consumption expenditure, whatever the households are going to consume, and whatever is the investment expenditure. In that case, the equation is going to be Y is equal to C plus I. This is the national income equation for a two-sector economy. This is the national income equation for the two-sector economy. Kindly note down this equation. We are going to scale up the equation. लेकिन basic two-sector economy के लिए ये है Y is equal to C plus I. Okay, how much are the business firms going to produce? That much amount which the households are going to consume, that is consumption expenditure, and the businesses are going to make investment, that is investment expenditure. So Y is equal to C plus I. अभी इसको है ना दूसरी एंगल से ले लो. Okay, look at it from other side. Okay, what is the country going to go do with this national income? ये national income के साथ जो भी है 100 रुपए national income है, what is the country going to do with the national income? This country is either going to consume the national income or it is going to save the national income. बराबर? This country is either going to consume the national income or save the national income. Therefore, in that case, you can also have an equation Y is equal to C plus S. In that case, you can also have an equation, okay, Y is equal to C plus S. So Y is equal to C plus I or Y is equal to C plus S. Even over here, you can see that I is equal to S. Because national income is the same, therefore I should be equal to S. C and C is same. Y and Y are same. C and C is same. So I should be equal to S. Okay, this is how constancy of circular flow of income is maintained. So this is how through the equation we can understand, or you just know the equation Y is equal to C plus I or Y is equal to C plus S. Okay, let's move ahead. So this is the equation, either Y is equal to C plus I or Y is equal to C plus S. Now this was about the two-sector economy. Now let's move to a three-sector economy. Okay, this is a three-sector economy. Why three-sector economy? Because now you have the government. So this is the first sector, this is the second sector, and now this is the third sector. You also have the government. Okay, but even now it's a closed economy, because what is a closed economy? It does not have any relation with the rest of the world. Okay, so this is a three-sector economy, but even now it is closed economy. Even now it is closed economy. So what happens with over here? Now the relationship between household and business firms is the same. जो हमने पहले देखा था, whatever we had seen earlier, the relation between household and business firms. From the household to the business firms, you have factors of production, and from the business firm to the households, you have factor payments. Again, from the household to the business firms, you have consumption expenditure, and there is a flow of goods and services from the business firms to the household. That relation is the same. But now, since you have government, what is the relation of government with the households and government with the business firms? So government is going to collect tax from the household. So money flows from household to government via tax. But the government is also going to pay wages and salaries to those who are employed. Now you all want to be selected through MPSC into the government sector. So who is going to pay your salaries? It is the government. Okay, it is the government. So the government is going to pay the salaries. So by way of wages and salaries, the household, they get the money. Okay. Similarly, government is also going to demand certain goods. Government also need cars, government also need buildings, government also need chairs, government also needs mic, computer, a lot many things. Okay, so government makes purchases. Okay, this is known as government expenditure G. This is known as government expenditure G. So government is going to purchase goods, and so money is going to flow from the government to the business firms. But government also collects tax. Government also collects tax from the business firms. Okay, and it also collects tax from the households. So that's how the money goes to the government, and this is how the money goes back to the households and the business firms. Households via wages and salaries, business firms via government purchases. So even if the government decides to build a Samruddhi Expressway, so government is going to purchase cement, government is going to purchase iron and steel, government is going to purchase labor, service, whatever it is, and the money flows back to the circular flow of income. Fine. So this is a three-sector economy. Now, again over here, just understand it over here itself, in the diagram itself. Again, what is the national income of this three-sector economy? Okay, what will be the national income of the three-sector economy? Fine. The national income is going to be the same as what is being produced by the business firms. Okay, since there is no external sector, जो भी internally produce होता है, that is going to be the domestic product as well as the national product. So national income is same as what is produced by the business firms. What will the business firms produce? How much will the business firms produce? One, whatever is the consumption expenditure of the household. Second, whatever is the investment expenditure of the business firms. And third, whatever is the government expenditure. Whatever government purchases make, that will also be produced by the business firm. So for the three-sector economy, Y is equal to C plus I plus G. Check whether you have understood. Yes, check whether you have understood. Okay. Yes. Have you understood this? Y is equal to C plus I plus G. This is the equation. This is the equation for national income for a three-sector economy. It's a closed economy because we have no relation with the rest of the world. So this is the equation for the three-sector economy. So Y is equal to C plus I plus G. That is the equation. Okay. So kindly keep that equation in mind. Now let's move to the four-sector economy. Okay. You have a four-sector economy. Okay. What is the fourth sector? The fourth sector is the foreign countries, the rest of the world. So this is the first, this is the second, this is the third, and this is the fourth sector economy. Now this is an open economy. This is known as an open economy. Why open economy? बाहर से कुछ अंदर आ सकते हैं, अंदर से भी कुछ बाहर जा सकता है. Okay, so goods and services can flow into the country, and goods and services can also flow outside the country. Fine. So this is an open economy. Okay. Fine. Till three-sector economy, we had a closed economy. This is an open economy. Now, the relationship between household, business firms, and the government is the same as what we have done in three-sector economy. Yes. So what is the fourth sector? Foreign countries. What is the relation of this foreign country with the household and with the business firms? Abhi, what happens is that from the households, okay, from the households, you have, okay, from the households you have people being employed, okay, outside. You have many people from Kerala who go to the Middle East, okay, from Gujarat who go to the US, okay. So people are employed from these states outside, okay. So when they are employed outside, they get wages. Okay, they send remittances to the country, back to the country, back to the household. They send their salaries back to the families. So households, they are going to export manpower. They are going to export manpower, for which they are going to get foreign remittances. They are going to get foreign remittances. Paisa aane wala hai. Okay. Similarly, business firms, either business firms are going to import something or export something. If they import something, they'll have to pay money to the rest of the world. If they export something, they are going to get money from the rest of the world. So business firms, they get receipts from exports and they will have to make payments for imports. They will have to make payments for imports. Fine. I hope this is understood. Okay. So now the question comes, what is, now this is the final equation. What is the equation of national income for the 4-sector economy? Okay. So again, going back to the basic understanding, whatever the business firms produce is going to be the national income, including the export and imports. Okay. So what will the business firms produce? The business firms will produce how much is the, whatever is the consumption expenditure, utna to produce karenge. Whatever is the investment expenditure, wo bhi business firms produce karenge. Whatever is the government expenditure, that also will be produced by the business firms. And over here with the rest of the world, business firms will produce something like export minus import. Whatever exported they will produce, but for that, if they have imported something, that has to be subtracted. So the equation for a 4-sector economy becomes Y is equal to C plus national income is equal to C, consumption expenditure plus investment expenditure plus saving plus, I'm sorry, not saving, sorry, plus government expenditure plus X minus M. This is the equation. This is the equation for a 4-sector economy. Okay, this is the equation. I'll write it down with a different pen. Okay, Y is equal to C plus I plus G plus X minus M. This is the equation for a 4-sector economy. X minus M is net exports. एक्सपोर्ट्स माइनस इंपोर्ट, 100 रुपए का एक्सपोर्ट किया, 30 रुपए का इंपोर्ट किया, सो नेट एक्सपोर्ट्स कितना है 70 रुपीज. 100 rupees export, 30 rupees import, so net export is 70 rupees. So this can be also written as, in the books you get this equation, Y is equal to C plus I plus G plus NX. NX is net exports, that is exports minus imports. So Y is equal to C plus I plus G plus NX. Yes, so this is the equation for a 4-sector economy. This is the final equation. Please mug up this equation. Y is equal to C plus I plus G plus NX or X minus N. Once MPSC had given you simple figures for C, I, G, X and M, and they had asked you to calculate the national income. What is the national income of that country? Okay, you just had to add and subtract the figures, nothing else. Okay, the figures were very simple, but you need to know this equation. National income is equal to C plus I plus G plus X minus M. Yes, this is the equation for the 4-sector economy. Okay, so thus in an open economy, national income is equal to C plus I plus G plus NX. So this is the equation for open economy. So GDP is the sum of private consumption plus gross investment in the economy, government investment, government spending and net foreign trade. That is the difference between export and import. Okay, fine. So this is the equation, private consumption plus gross investment, C plus I plus government investment, G plus government spending. That is, so this two will going to be I, this is C, this is G plus NX. NX. Okay, so what do you get from this equation? Y is equal to C plus I plus G plus X minus M. What do you get from this equation? In an open economy, aggregate domestic expenditure need not be equal to the aggregate domestic output. Okay, whatever you consume need not be equal to the production. Okay, understand this. If the domestic government plus business plus private consumption, ये तीनों को मिला के if the domestic consumption is 80 rupees and the total production is 100 rupees, output is 100 rupees, so 80 rupees तो domestically consume हो गया, 80 rupees is consumed at home. What will happen to the rest of the 20 rupees? It will be exported. It will be exported. Okay, fine. If the aggregate domestic output Y is more than the domestic expenditure, what is the domestic expenditure? C plus I plus G. So if the aggregate domestic output is more than the domestic expenditure, the remaining amount would be exported. In that case, X and X would be positive. That means there will be more export than import. But if at all, see, let's say this is 100 rupees and C plus I plus G, this value is 80 rupees. So what happens? This value comes to 20 rupees. That means exports are going to be more than the imports. इसके उल्टा कर लिया. Okay, fine. Output is 100 rupees, but domestically you are consuming, understand this, domestically you are consuming 120 rupees worth of goods. Okay, so this has to be minus 20. Minus 20 means export would be less and imports are more because you are consuming more than what you are producing. So the domestic demand is more than the domestic output. In that case, you will have to import. Here, import is going to be more and export is going to be less. This is what you get an understanding. Okay, check whether you have understood this. Okay, C plus I plus G is the domestic demand. Okay, C plus I plus G is the total domestic demand in the economy. If it is more than the output, you will have to match it with the import. If it is less than the output, the remaining output you can export it. That means in that case, export would be more than the imports. Check whether you have understood this. Yes? And if domestic demand is 100 and output is also 100, okay, the national income is also 100, in that case this value is going to be 0. That means exports are going to be equal to the imports. Whatever you export, the same value you are going to import. Okay, these are the three cases you can have. Okay, these are the three cases you can have with respect to X minus M, export minus import. Export will be more than the import when you are producing more than you are domestically consuming. Export will be less than the import when you are domestically consuming more than what you are producing. And export will be equal to import when you are domestically consuming as much as you are producing. Whatever you are producing, you are consuming. So X and M values is going to be the same. Okay, I hope you have understood this. Fine. So this is about the national income. There are still more aspects with respect to the national income. Okay, so what have we done today? We have understood the four concepts: GDP, GNP, NDP, NNP. Okay, in detail we have understood the four concepts, how to calculate the four concepts, then what are the different ways of measuring the GDP we have or the national income: output, income and saving plus expenditure method. Okay, then we have understood the different prices you have. The values of a product can be calculated in three different ways. One is the factor price, basic price and the market price. So for the same commodity you can have three prices. Okay, so therefore you can arrive at your GDP, GNP, NDP, NNP at different prices. Okay, fine. We have understood the relation between all the three prices: factor price, basic price and the market price, and what exactly would be known as national income, that also we have understood. So national income is going to be NNP at factor price. You can mug it up or you can rationally remember that why it should be NNP at factor price. Okay, then we have come to the circular flow of income. We have understood the circular flow of income in the economy, and also we have understood the equations with respect to that. Okay, so with the circular flow of income you get an understanding of how the economy is working. Okay, so this helps in the further topics which we are going to deal in economy. Fine. So we'll stop over here. In the next session also we are going to continue with the national income. Stay tuned. Okay, slowly but surely we'll finish off all your economy with the concepts and the facts which you need to mug up. Fine. Thank you from this side today. See you in the next lecture. Thank you.